Welcome to the FinTalk Show, where we spotlight entrepreneurs revolutionizing financial services. My name is Osman, your host from ProSAI, where we help fintech businesses to scale revenue and reduce operational cost using various AI tools. If you are looking to take your business to the next level, stick around. And if you want a free consultation, growth consultation, just drop us the word growth in the DMs and we'll get back to you. Our guest today, I'm very excited to introduce James Van Russell, CFA, founder and CEO of Van Russell Ventures, a CFO advisory firm that has been helping US-based companies to scale since 2014. James has an incredible journey from Wall Street VP at 26 to CFO of South Pacific Microfinance Network to now leading a team that is supporting venture-backed companies from Series A to Series D. Welcome, James, to the show.
Thank you, Osman. I'm very excited to be here.
James, maybe take us back. You're, I think, originally from Belgium, elite tennis player, Wall Street VP at 26, generating, millions of revenue in sales. That's quite a classic fast-track finance career. But then in 2008, you decided to pivot completely into microfinance and eventually launching your own venture. How was that transition for you?
Yeah, it was a challenging transition. I think what few people know, if you haven't worked on Wall Street, is that on Wall Street you're very focused, right? You're a specialist in a slither of skill sets and information, and so to be able, even within Wall Street, to be able to shift from one job to another is very challenging because you're such an expert. You're very, very deep in the subject matter. So when I decided to move away from Wall Street, the desire was really one where I wanted to do something that was more impactful, and really looking at social finance, sustainability, and at the time, the whole impact space was still very nascent. It wasn't very well developed. The only area that was reasonably well developed was microfinance, and I, in a way, landed in that area. My main focus was still social finance on Wall Street, but we were entering the financial crisis in 2008, so it wasn't a great time to be focused on that in New York. But the transition wasn't easy. The transition, I had to spend a lot of time networking, building out a brand new ecosystem of people to know, to understand. And one of the challenges as well was when you're looking for work in the development area, they always, people say, great, if you have the skill sets, that's great, but you need to prove that you're interested and you haven't been to, a developing country to do the work. And there's lots of people who have been to developing countries who've done the work and they don't have the skill set, right? So they needed both. And so I actually spent 2.5 months on the island of Samoa, Western Samoa, not American Samoa, Western Samoa, doing microfinance work before settling into a full-time job.
Right. And I believe you achieved quite some phenomenal growth, building a lot of momentum there. Was there a period of time where you felt like, because it's fairly new area, different jurisdiction. Was there a moment where you wondered whether this will actually really work?
So the founder of the microfinance network he had been doing it since the year 2000. I came in just as he was hitting an acceleration phase. So he kind of perfected the model that he wanted to do on the islands, because the islands are challenging because they're small populations versus much larger populations in other more well-known microfinance-focused countries. And so when I started, he really had one microfinance bank and was just launching a second one in Tonga. And so over the next 5 years, we launched a few more, and created a couple of holding companies for investors, and grew it out like that. I really joined right at the moment when there was a lot of momentum.
Fantastic. And then I believe in 2014 you were back in San Francisco and you decided to start your own venture. How was that? What made you build a consultancy instead of going back? You could have gone back to like a CFO role in one of the big organizations, but you decided to venture into your own consultancy. What specific gap did you see in the market?
Yeah. So what happened was, I got married and moved to San Francisco with my wife. And within 3 days of moving there, one of the largest investors in the microfinance network emailed me and basically said, "Hey, if you're interested, I want you to grab coffee, with one of my portfolio company CEOs. I think, you really enjoy meeting him in a new city." And
Right.
so I said, "Okay, that sounds good." But it was really a setup, because he needed a fractional CFO. And so I just said, "Okay, I'm here for 3 days while I'm trying to figure out what I really want to do. Let me work half time with him." And so that was really interesting. And then I, got another client, and it kind of went from there. And then I decided that I really liked the entrepreneurial journey and trying to build a company, which is not very easy, but yeah.
Yeah, wow. Okay. And we've also seen some remarkable testimonials. I think one of them mentioned top 1% of CFOs. Can you walk us through a specific client's transformation? Someone who came to you at a critical inflection point, and you know what was broken and how did you fix it for them?
Yeah. So usually when we come into companies, there is something that's broken or that's gone awry, which might be, they're running out of cash. There's been some level of fraud. They've been trying to scale, but they haven't been able to. And
Right.
there's a reason why, but they haven't quite figured out what that is. And so one easy example is usually around when we work as an interim CFO. So it's a large organization. They've had a full-time CFO, but for some reason, in this case, that person had left, and they had taken their next most senior person with them. So there was definitely a leadership gap there. In this situation, everything was running well. The organization was having some issues, some cash flow issues, the need there. The original idea was that I would be there for 2 months. I ended up being there for a year and a half. And the challenge there was stabilize the finance and accounting team.
Yeah.
That was number one. Number two was work with the CEO, give him advice and where to go next. And then challenge number three was helping to raise money.
Right.
So we spent a lot of time raising debt, raising equity, reviewing partnerships, really going through the spending, the budget, and
Right.
significantly reducing expenses as well to get more in line with where the revenues were. And that was for me, that was a highly enjoyable engagement. I was sad to see end. We part of the engagement as well as is the transition, and how do you transition well. And so we helped hire a full-time CFO to take over, and the
Right.
company has done very well since.
Yeah, fantastic. And your specific model is actually quite fascinating. You're not just advising your interim CFO, you're also building teams and implementing systems and actually then handing over to an internal team. That last part there is quite unique because most consultants would want to stay longer or stay forever. Walk me through that, how that works, end to end in a typical client. Is that set out from the beginning, the timeline, how that works? Because you're not just advising, you're not just coming in as an interim CFO, but there's a much longer outlook, which is actually quite beneficial for clients.
Yeah, I think when you're an interim CFO, you really want to think about when do you bring in full-time people,
Right.
because usually they've had them in the past, and so how do you build out the team is really important. And sometimes the client will engage an executive recruiting firm to help out. Sometimes they don't, and you'll be actively involved in the hiring. When we work with clients and we bring in a team, so it might be a CFO, a controller, FP&A, HR. There's usually, we're setting up the systems and the foundation to be able to grow and scale. And the key there is also how do we start bringing a lot more in-house? And usually This is more of an art than a science. Is how do we identify the first employee to be hired into the system to really strengthen it.
Right.
And for us to be flexible as well. So if there's more work that needs to be done, we can increase our number of hours. But if there's less work, we can decrease it very easily as well. And the goal is really over time to step away. I've noticed that we have long engagements, can be 2 years, 5 years. I think the average is about 3. Longest one right now is 10, and still going. But what I notice is that after 3 years, there needs to be a complete rescoping of the relationship because things change, the company grows, people have moved on. There are different needs, and the relationship is shifting, and the amount of work that needs to be done has shifted. And so it's really important to sit down again with the CEO and just say, okay, this is where we're at. We need to rescope this so that, we're both successful because, we have to maintain certain profitability and hours and know where we're going. And so having open conversations about, how well we're doing in
Yeah.
helping the organization is really important.
Amazing. With your experience, of course, working with various different organizations, whether these are companies that are looking to scale nationally or internationally, also with your experience with South Pacific, what are some of the biggest financial mistakes you see companies making when scaling?
Yeah. So we do work US and international. I do quite a lot of work with an accelerator as well. The challenges with scaling is usually around people and processes,
Right.
and it's not keeping up with them. It's every time you grow, you need to upskill and upgrade your team.
Right.
You can't just, keep the same team for 10 years and hope that, after you've grown 5x that
Right.
they're able to, still envision everything. You've got to, there's got to be, some new people, maybe there's a new leader
Right.
and understand that that's normal.
Right.
So I think that's one. And then the other one is just really having a close eye on cash flow.
Right.
Whether it's working capital, whether it's, AP and getting and paying people on time, but also AR that you're getting paid on
Right.
time, that there's no bad debt, which can stifle growth significantly. And then also always having a 12-month rolling forward-looking cash flow so that you see what's coming. Even if it's bad and hey, it's bad 4 or 5 months out. At least you got 4 or 5 months to deal with it, and it's not a surprise. So that's one of the most important things to know.
Right. And just coming closer then to your specific area, the fractional CFO has really exploded in the last few years. The demand for has gone up, I think, 103% year on year. Turnover in the CFO, roles is, quite high also, around 22%. But you've been in this space for quite a long time. I mean, people are seeing fractional CFO now becoming quite a trend. You've been in this space for over 10 years now. You've seen the evolution. What's driving this surge beyond just cost saving? And is this sustainable, or is it just a bubble for?
Yeah, when I started doing this in 2014, there were very few companies out there doing this. But the ones that had been around for 15, 20 years. So it's not a new thing. But it has exploded. The competition right now is very, very high. And I think with that, the quality differential is very, very high as well. But I do think it's going to continue. It's the whole gig economy. And I think that the understanding that even when you're a small company,
Right.
I think it's really important to have that strategic quality there because you wanna be set up correctly from day one. And just bringing in somebody who's very senior and has seen it before, right? You
Right.
always want to be thinking about if I'm at $100,000 of sales, I want to have somebody who's grown a company from 100,000 to a million to 5 million. So, somebody who can look back and say, oh, this is how it was done. And there's, lots of different people. Like I don't think you want to, if you're a 10 million revenue company, I don't think you want to be hiring the CFO of Google to be your CFO, right?
Right.
That's a whole completely different job.
Yeah.
Uh, and so it's really important to know what that is. But I think the next step, and you might be, heading there anyway, and it's kind of your business as well, is, when you hire someone as a fractional CFO these days, they really have to understand AI and how to implement it, because that's really the next step, right?
Right.
You don't want to be hiring somebody who, knows how it all used to happen, or is still happening, and that's really important. But it's also somebody who's very agile and flexible, and
Right.
can think outside the box. And I also think that one thing that I have personally, um, is, I still do CFO work, but I also, run my own company, and so, I feel the CEO's pain of, making payroll and, hiring, the wrong person and it backfiring. And, I feel like having that emotional intelligence around that and knowing what they're going through, is, I think, invaluable. And that's pretty rare. And, a lot of the CFOs I work with, on my team, they've never run a company. I mean, they're great CFOs, but I think
Yes.
it's like a little extra understanding there of, what's really going on in the CEO's mind and decision making. That's important.
That's something quite unique you actually bring, because you're running your own business as a CEO, but you're providing also that CFO experience. So you sort of already understand how the pains of the CEO they're going through. I know that you're now, or you've partnered with NIA to also build your team and international talent, while filling up roles and making a lot of savings. How do you think about building a finance team in 2025? It's remote, international, fractional. What's the winning formula?
Yeah, I mean, I think it depends on your company. There are still companies who want everybody in the office,
Right.
and that's great. I feel like you can really, if I built out a finance and accounting team from scratch at a company,
Right.
I would probably look at it, as a very distributed workforce that I would have. One of the benefits of having somebody in the US and then, in Asia on a completely different time zone is you can do work 20, right?
Absolutely.
And you're really only missing about 24 hours during the weekend where there's no overlap with the work week. And so there's so much more work that gets done. So I think in the US, because you also want to be audited using US GAAP, you need to have people who understand US GAAP.
Right.
It's not the same as IFRS. It's not the same as some other accounting
Yeah.
standards that are out there. So you're going to need, US people as well. But I would definitely work with a lot of contractors,
Yeah.
um, to really augment the core team. So you'd probably have, and especially these days in AI, the teams can be smaller because it's more efficient. But I think you really want to go with very senior people,
Mhm.
at the CFO level, the controller level. And then I think you can, at the more junior level, you can go and work with people abroad. So if you're in the US, right, as an example, the Latin America has a similar time zone. It's not
Right.
perfect, but it's similar. And so there's a lot of overlap during the day. So you can communicate all day long, but then you can also work with people overseas, and you'll have kind of beginning of the day, end of the day, an hour maybe, but it can be enough to work through a lot of things. So that's probably how I would think about it. A small core of, 2 employees, some contractors to augment, and then overseas employees as well that can help with a lot of work.
Right. I mean, you mentioned something that I hadn't even thought about, but, stretching not just the day, but also the week, that you're only missing about 24 hours on the weekend, because all those time zones, when you put everything together, there's actually people working pretty much 7 days, 7 days, 6 days a week.
Yeah.
How do you maintain quality when you have such distributed teams?
It's good systems and processes.
Right.
I think one thing that is very beneficial to do, and
Yeah.
you need to be a little bit of a larger company, but you don't have to be very large, is you can hire CPA firms to do internal control projects, right? And especially when you work overseas and there are offices overseas, there's no way you can know what's really going on there. So having, during the year, it's not a statutory audit, it's just an internal audit. You can
Right.
focus on certain systems or processes or locations every year. But to have a good review of the design of the internal controls and making sure that there's proper sign off everywhere, I think is
Right.
very beneficial. And you can hire teams from, organizations overseas to do this in India or the Philippines, or that's very, very, it's good value. It's very
Right.
cost effective to do that. And so I think that's a really good way to do it. And of course, hiring somebody, hiring trustworthy people as well.
Right. Right. And you touched briefly on AI, and I know there's a lot of talk on AI, and I think you also did recently a podcast about AI and office automation in the future. Every finance conference talking about AI in FP&A, forecasting, etc. From your vantage point of view, and having working with multiple companies, what's actually working in AI in finance right now versus what's hype?
Yeah. Um, so I think ultimately, and I could be wrong, ultimately all the AI is going to be in the softwares, but it's not quite there yet.
Right.
And then maybe it's a year or two away. But what I'm seeing right now is there's like an inner place that's being filled up. So there's hey, I can use ChatGPT to ask lots of questions and do stuff. And then there's the full blown softwares like NetSuite and Intact and Adaptive Insights. And then
Right.
somewhere in between, there are workflows. So, for instance, you could take accounts receivables and write out a 20-page document of, here's our workflow. And it has, it's 20 pages because it has all the branches of, if this person hasn't paid their invoice after 10 days, send this email. It's a little bit of a computer program, but you're going to need a developer.
Right.
And AI hasn't been around for very long. All the great AI developers have been hired by, big tech. But so much is being automated right now that there are lots of software developers who don't have work.
Right.
And I don't think you need to be an AI expert to do this.
Right.
So I think if you can hire a developer who can come in and grab your workflow, tie it to ChatGPT, and just have it run as an agentic whatever it's called, an agentic AI, and as an
Yeah.
agent.
Mhm.
Um, that's really what I'm seeing. It's one workflow at a time, AR, AP, whatever really makes sense. And then some of the things we've done as well is just to try to create agents from uploading all our proposals from the last 3 years and saying, here's our BD call that we had with a prospect. Put it into the agent and have it spit out a proposal.
Right.
Um, and then you can start tweaking it. But it's that's kind of a shortcut of
Right.
the next level is that kind of AR agentic AI agent that gets you to automate, and as they say, you start it, you view it as an intern, you tweak it, you improve it, then it becomes an associate, and you finally want it to run independently. But that's you know that takes time. And
Yeah.
and then the question really is, okay, once I've done all of this, in 2 years' time, is it all going to be obsolete because there's going to be softwares out there doing it?
Yeah.
But a lot of the time, you can't wait 2 years. And you asked me a question as well about what do I think the future is of fractional work. I think it all depends on AI, and I think that um, a lot of the lower margin busy work is going to disappear. So a lot of the bookkeeping, you just don't know if it's going to be around three
Yeah.
years from now. One thing that I've done as well is this year, me and two colleagues in New York have started a small investment bank that focuses on impact companies, social impact companies. And so with that, we're really focusing on helping to capital raise, and whether it's doing mergers with nonprofits or it's actual acquisitions for-profit companies. And I feel like the relationships are still going to be around. Kind of the art of doing deals and everything is still going to be around, but a lot of the work's going to be done by AI, and you just
Right.
need good senior people to do it. We're playing around with building models using AI now. It's not there yet for sure, but every day it's getting closer.
Right.
And so I think with a 2-year time frame, like how much are we really going to be building models still, or it's just going to be speaking them into existence?
Yeah, that's pretty impressive, actually. I mean, when you look at it, as you're saying, a lot of the bookkeeping, a lot of the lower end tasks will be automated, will be done by AI, but the senior roles will still stay. And when you look at it this way, you would think that fractional CFO is actually going to be amplified more by AI rather than AI being a threat to this kind of model.
Yeah.
What?
Yeah, I think so. I think it's, every individual will be able to 10x their productivity and their usefulness.
Right.
And there's going to be a lot more need for learning and development amongst the
Right.
team, and probably a lot more need for coaching.
Right.
But yeah, a lot of, every person who's focused on, AP only is probably going to see 100% of their time reduced to like 10%. And they're going to have to figure out, the company's going to say, we love you, you do great work, but what else can we put you to work on?
Right.
Which basically means that there's just less jobs out there. And I think you're starting to see some of that now with the
Right.
job numbers in the US. There might be a confluence of, big tech over hiring during the pandemic. And now they're still, it started a while ago, but they're still laying off a bit, plus
Mhm.
AI. And so you're
Yeah.
seeing, the job numbers not being good right now. But I think that's really a trend of higher productivity. Yeah.
And we are looking at the economic environment at the moment. We are in some sort of what some call a perma crisis environment. Constant volatility, cash becoming king again, CFO priorities shifting from growth, at all cost, to efficiency because of just the kind of environment that we are in. How should companies be thinking about financial strategy differently in 2025, maybe, as opposed to 2021, because we are in this environment where things are changing so quickly. There's a lot of volatility, and
Mhm.
priorities are really changing now.
Yeah. Um, I think you always want to be tight on your expenses, but yeah, like you said, there's a lot more risks and a lot bigger swings happening,
Right.
especially when it comes to tariffs or, fundraising is very challenging right now, unless you're an AI company, or the other companies are really being challenged. And especially in the nonprofit world, it's extremely challenging. So what I see a lot of is companies projecting out and saying, this is what I think we can do in 2026.
Right.
That's less than we would have thought a year ago. And
Okay.
so they're basically readjusting their budgets, their total expenses down to match the revenue. And so coming in at a lower level with the hope that it'll be higher. but feeling comfortable that, okay, we can manage this level.
Mm.
And also, I mean, I've heard many boards mandate to the CEO, give us your AI strategy. And then the CEO comes back and says, okay, everybody has to implement AI because we're not going to hire next year. And so that AI is going to make you more productive. And
Right.
if you have to hire someone, we'll hire someone, but I don't
Yeah.
expect to. Something along those lines. And I
Yeah.
think we'll probably see more companies hire AI experts who can
Right.
come in, review systems and operate and processes and operations internally, and basically create that AI strategy in every company.
Right. Right. We might see actually some of these AI audit companies mushrooming, coming to organizations to just really do an AI audit and give a strategy to the business. You mentioned something there around fundraising, and I know you have deep relationships with VCs through your podcasts and client work. What are investors scrutinizing now that they weren't 3 years ago? What are the fundamentals of, what is non-negotiable now for fundraising?
Non-negotiable for fundraising. I mean, I think you want to have everything buttoned up, right? You want to have that data room that's completely ready and ready to go. There just can't be any mistakes in everything that's going on. And like we said, you got to have a clear AI strategy. Even if you're not an AI company, what is your strategy to become more efficient? So it's not just how fast can I grow revenues, which is still kind of the main thing, because you've got to be in a big marketplace to see
Right.
your valuations go 100x. But I think it's so closely tied to how do you keep your expenses tight and in line, and how do you minimize the amount of money you really need to raise,
Right.
being able to keep expenses lower than you probably could have in the past. So
Right.
the payroll line, which is typically the largest line for, I would say, most companies,
Right.
could be going down as a percent of revenue going forward.
Right. Right. And coming closer to your own company now, I know, you've built this over 11 years and, growing team, strong reputation. What's your vision? Like, if you wanted to, eh, do you have a vision in terms of, do you want to 10x? Do you want to 3x? What's your vision?
Yeah, I mean, I would like to 10x if possible. And I think that that's possible to do
Right.
using AI.
Right.
Right. I think consulting firms are historically very challenging to scale,
Right.
and to scale beyond a certain size. But I
Right.
think with AI, you can have, as they say, you can have that company of one that sells for $1 billion.
Right.
I think I think you got to have a very specific business to do that. But I think as a consulting business, you can have a lot less people, be a lot more efficient, and so I think a lot of the headaches will
Yeah.
go away as well. But you need to keep upskilling people.
Yeah.
Everybody's really busy doing work, and you got to just help them see how AI and all the different LLMs can help and how to use them, because
Right.
I ask people, how do you train your team on AI? Like, what courses do you take? And nobody has a really good answer. Nobody says, here are the 2 top courses, like, you got to take these, or it's still out there what the right way to learn is. But there are definitely a lot of places that provide courses. I just don't know how good the quality is overall. And
Right.
especially if professional services versus a tech company versus something else, because you really want to be specialized. You don't just
Right.
want to have a general AI overview. You want to be, I need to know how to use AI for my consulting firm.
Right. Right. And just for our audience, maybe people listening to this or watching this, who are your sort of typical clients, and how do you actually reach your clients? Or do they come to you? Do you go to them? Who are your typical clients?
Yeah. So typical clients, 80% of our clients, 70 to 80%, usually have something to do with impact, where the CEO says, I want to make an impact, right? Some of them are social impact. Lots of them are in tech and healthcare. So it doesn't, and a lot of them are VC backed, some
Yeah.
bootstrapped, some of them are nonprofit as well. And having that combination of the three, I think, is really powerful because you see, you get a really good view of the whole marketplace. And then we usually work, I would say the biggest value is over 2 million in revenue.
Right.
Typically we go to about 100 million, but the sweet spot I think is somewhere between 2 and 30. On the VC side, we typically start as you move into Series A.
Right.
Anything smaller really just needs accounting and
Yeah.
maybe a couple of hours of strategic advisory, which, we just do more, we do more than that. And then it usually goes through about Series D,
Right.
and pre-IPO and just before IPO. We don't, going IPO that's a whole different project. So those are typically the companies we work with, primarily US, but we work with a lot of companies in Africa and Asia as well. And so I have experience with that in many different companies and the countries in India,
Right.
Bangladesh, uh, Rwanda, Uganda, Kenya. Um,
Amazing. Amazing. Good to hear you mention Kenya there because that's my home country.
yeah. I currently work with a company that does business in Kenya.
Right. And how do you, I mean, do you typically go to them? Do they come to you? What's your acquisition strategy?
Yeah, so it's a lot of referral based. So building deep relationships with current CEOs, ex CEOs, boards of directors, investors, and then also building partnerships with other firms, other CPA firms, other big software companies. It's building that ecosystem, and I also spend a lot of time getting to know other professional service providers because a lot of times I'll work with companies and they're all different, and so they might say, I need an audit, and then I
Right.
need to know, 7 different audit firms and the partners there and what they do so I can properly refer business out and get good RFPs done. And that's
Right.
the same with corporate attorneys, M&A brokers, wealth managers, just across the spectrum.
Right. Right. And I know you've, in terms of your vision, you've mentioned supporting ventures and mission-driven businesses worldwide, global impact, US roots. What does success look like for you over the next 5 years, just beyond revenue?
Yeah, I mean, I think from a holistic or a deeper meaning, success is being able to work with a lot of different companies that are looking to make a positive impact in the world. There's lots of them out there. There's lots of very exciting founders who just have incredible ideas on how to, help the maximum amount of business. And there's lots of investors and foundations out there that specialize on investing in companies that really want to scale impact. So if you're not looking to, if your product isn't producing impact and you're not going to reach, over 1 million people in the next 5 to 7 years from inception, they probably won't invest in you. Like that's their focus. And so work is hard. That's why it's called work.
Yeah.
But I think at the end of the day, if you can feel like, wow, somewhere I'm helping these companies scale, and I know that they are helping these people in some way, it makes it worth it. Makes it worth all the
Wow.
blood and tears.
That's amazing. That's amazing. James, thank you very much for those insights. I think it's been very insightful. I mean, we've explored your journey, your insights into how AI is going to change the landscape, especially in the finance or fractional CFO area, and your insights also into fundraising. I think that could be very useful also, or will be very useful for our viewers. Is there anything else that you think our viewers should know? Anything that they should take away from you today?
I'll tell you what one person told me on a podcast as an ending thought, which I thought was the best and is really important to me, is that even though work is very important to me and I work very hard,
Right.
my family still comes first, and so being
Right.
able to spend time with my kids who are growing up, and they'll be out of the house and a certain number of years and, spending time with my wife is still the most important thing to me.
Amazing. That's a very good way to end it. Is there anywhere where our users can connect with you or to learn more about your business? Is that on LinkedIn? What's the best way for our users our audience to get in touch or to just learn more about you and your business?
Yeah, to get it, my email is definitely the best way. It's james@vanrusselventures.com. I'll see messages on LinkedIn as well, but it won't be as quick.
Right.
And then, you can go to the website, vanrusselventures.com, and there's lots of resources on there as well.
Fantastic. I'm sure based on the insights that we've seen today, I'm sure there's a lot of people who would probably want to get in touch and learn more about your work and what you do. To our audience, thank you very much for tuning in. If you found this episode valuable, please subscribe and share it with someone in the startup community or finance community. You can also see more episodes and resources on our website, YouTube or Spotify, or even on LinkedIn. James, thanks again for sharing those insights into the future of Fractional CFO and a bit more on international scaling. And to all those tuning in, we'll be back next week with another episode. Thank you all. And James, thanks again for being with us.
Yeah, thanks, Osman. And thank you for everybody who's listening.